Hi guys, it's your boy 𝙎𝙬𝘾 on the chat. So today I'm gonna do a trade breakdown on gold that I eventually predicted last week Friday. So let me just remove everything. Right. So what we do is that we always start on the 4-hour time frame. So let me just remove everything right here. Then start on the 4-hour time frame. So guys, let me just head up to the 4-hour time frame quick. So what did I see on gold last week Friday is that price made a high, low, and a break and a high break of structure. So at my trading range, they were trading from this low to this high. So guys, this was the price leg on Friday before price mitigated the demand level that I predicted that it would mitigate on the previous video. Just go watch that previous video and understand what I saw on gold. So guys, let me just drop into it. So what I saw is that gold is actually bullish, right? Because we had a break of structure and price was pulling back. So what I saw last week Friday is that just look at from this green level going to the left. Don't look at anything on the right, because last week Friday we saw that price had a bunch of liquidity resting before our demand level. So what I saw last week Friday is that price actually had relatively equal lows almost everywhere in the market. So what I saw is that we had relatively equal lows right here, which was swept. You'd see on the previous video when I predicted that price would come and sweep these levels right here. What I saw on the previous video is that we have relatively equal lows resting here, and we had relatively equal lows resting right here, which if you can just clearly see, price swept that liquidity and it went up. So let me just drop down to the 15-minute time frame and break down on what I see. So guys, price came down, reacted off our auto block, and it went up. So before that we were right here last week Friday. So anything from this price leg, it was actually I think Monday or something, yeah, but from here it was Friday. Anything from here was Friday, so anything from there was Monday. So we'll be looking here. So what I saw on Friday is that we had a low, we had high. Most of you all thought this was our change of character right here, which it was eventually just a pullback. You all thought this push down, push up, push down, this was our last bullish candle before break of structure of this candle is our change of character, which most of y'all mistaken that for a change of character, which is not. So what I saw is that price has internal liquidity. Guys, anything that happens within our range is just internal structure. So yeah, so I saw that this was relatively equal lows, and we had relatively equal lows resting here clearly on the 4-hour and 15-minute, as you can see, which got swept. And like here guys, so let me just remove this, is that we had a low, high, lower low. Because why do I call this a lower low? Because this low is lower than this previous low right here. So we have a low, high, lower low, break of structure, pull back. I was looking to short the market from here, why was I looking to short the market from there? Because what I saw is that price on the 15-minute is actually bearish. So I was just following market structure, and what I saw is that we have resting liquidity right here as relatively equal highs. We have resting liquidity right here as relatively equal highs. So take this week, which price eventually changed character, guys. So I want to mark out a key point in this on why I was looking to short the market, because the price was actually bearish. So I'll just leave this supply level marked out for future preferences right now, which I'm going to explain in the video. So guys, the minute price broke structure, the minute price broke structure. Okay, sharp. I understood that price broke structure and we were pulling back. So I'm going to teach you how to trade or pull back on the 1 minute time frame. But you only trade the pullback after you've broken structure. You just check how, like I'll teach you right now how to trade the pullback. Let me just drop down to the 1 minute time frame. And okay, see guys, we broke structure here and price created a low, high, lower low. Why didn't I call this this bullish candle our low? Because it doesn't break structure, guys, right? So we have a low, high, lower low, break of structure, and I trade was based on the 3 candle pullback. The 3 candle pullback, it's simply 3 candles in the opposing direction that meet and break each other with succession. So we have 1 bullish candle break, 2 bullish candle break. Okay, you have 1 bullish candle break, but it doesn't have a body close. So we have 1 bullish candle break, 2 bullish candle break, and the 3rd bearish candle. So guys, that's our high right there. So we were trading from, on the 1 minute, we were trading from this high to this low, which price eventually broke structure, or I'd say changed character on the 1 minute time frame from here. And what I do is, right, we have a change of character right here. We have our change of character, and I'd go to the 5 minute and refine my order block that changed character, which was this order block right here. It's the order block that changed character. It's what I call our deciding level of demand on the 5 minute, and this is our original level of demand, right? This is our original level of demand, and this is our decisional level of demand. Because what I saw is that price came up, respected supply, created a bearish candle and broke structure. That's why I took this order block right here, and price came to mitigate our 15-minute supply level, which I was looking to short from, in which price eventually stopped us out, but it was okay. So guys, let me just hop on back onto the 15-minute time frame, because I already explained how to trade the 1 minute pullback after break of structure, but usually it happens most of the time, because sometimes you get low, high, low, low, break of structure, change of character, then you just place your buy orders, and price breaks through break structures again. So yeah, it's important to know the 3 candle pullback so you don't get stopped out most of the time. So guys, let me just hop on to the 15-minute time frame fast and explain. So after we changed character here, I saw that okay, we changed character right here, and I'll be looking to buy from a level that changed, which I'll be looking to buy from a level of demand where price changed character from. So it's the same thing we saw on the 1 minute time frame, is that price, this was a low, price changed character and was pulling back. So eventually we're trading from this low to this high. So price came up, made a bearish candle, came up, bearish candle, came up, respected the supply, bearish candle, and changed character. So this is our order block responsible for the change of character, which I mark out right here, right? So this order block is responsible for a change of character in which price mitigates and breaks structure from, right? So what I do is I place a trade, and after placing a trade, I take 5%, I take 80% from them. I take 80% off from the market and leave 20% on, but my target is usually 1 to 5. So for every 1 to 5 trade, I take 80% off the table and I leave 20% on. So from the trade, I take 80% off and leave 20% on. So I drop down to the 1 minute time frame to look for a change of character. So what do I see in the 1 minute time frame is that we have a low, we have a high, we have a low, because this low is lower than this low. So this is our break of structure right here. Right guys, this is our break of structure, and this is my high before breaking that structure, which eventually change character from here. We change character from here. After changing character, guys, I drop down to the I'd go to the 5 minute time frame to refine my order block that changed the character, which would be this order block right here, because an order block has to have liquidity to take, or it should have taken liquidity. So a good order block should have liquidity to take, or it should have taken liquidity. So what I see is that this order block actually had liquidity to take, right? It had liquidity to take because we have trendline liquidity resting above before the order block. This is eventually trendline liquidity, and that order block takes that liquidity and it liquidates the stop losses resting, liquidates the people resting, the buy, I'd say the buy orders resting here, right? It liquidates the stop loss, it takes everyone out who's been here, and price shoots up and breaks the structure. So overall, but what I see on the 15 minute time frame is that we also have, if you just zoom out for a sec, we just have resting liquidity below these lows. We have liquidity here, right, and we have liquidity right here. So guys, we have liquidity in many places, and what I'd look for, or what I want the market to do, is just react from this level of demand right here. What I look for is the price to react from this level, or for price to react from this level right here, because either way we have resting liquidity above our original level of demand, and we have resting liquidity above our decisional level of demand. So what I want is price to come here, change character, sweep this liquidity and go up, or I'd want price to disrespect this decisional level, respect to this original level of demand, and push up. So that's what I'll be looking for, and that's my take on gold. Thank you.